The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman on this 20th day of February. My pleasure to be here. It is actually the 8 a.m. Eastern Time show, which will be repeated at noon, my usual time. So this is going to be pre-recorded, but it's live right now. You can call in, and we're looking at a Dow that is sharply lower, down 125 in the futures. The S&P is down 11 at 27.17. And the E-mini, look at this, testing the 9-period moving average of 27.09 this morning. Now it's at 27.17. And my suspicion is that this is going to be a really important week, as I mentioned to my subscribers, to my opening call, my daily newsletter, very intensive newsletter, comes out every single day of the year, practically. And what was very important is that looking at weekly charts, there were certain conclusions that I will be able to hopefully assess and correct or modify by the end of this week. And the conclusions to the point that I can make a projection up until the end of last week. This week, I think, is going to be slightly different. And what I'm looking at is that in this huge move up from the lows that were made on the 9th of February, we've gone, for instance, from the 25.30 area. It wasn't the low. The low was actually in the E-mini a little bit before. That was on the 6th at 25.79. That's so interesting. Look, on March the 6th of 2009, the Dow made its low. We got that exact low, just to the hour almost. That was Friday. On the Monday, the 9th, the S&P made its low. So really what we're looking at here is like a little mini on the 6th of February, makes a 25.29 low, slightly higher low, 25.30.25 on the 9th, and has a really big move, 25.30 in the E-mini to the 27.50s. The exact number was 27.54.75. Pulling back now to 27.17. What's really important about this is the patterns that we're looking at. The E-mini down 1150 shows you it's almost like a single leg A. If we look at, and here's the 120-minute chart, made a peak F at 27.54.75, pull back to the 27.09 level, just under, it's sitting just under the 200-period orange color exponential moving average in the 120-minute chart, 27.24. is the 9-period exponential moving average, the black moving average right there on the 120-minute chart. The weekly chart really is the story. Look at this huge move, 28.78s down to 25.29s. Has a big bounce, over a 50% rebound, but it hasn't made a leg A. It needs to go above. It doesn't have to close. It just needs to go above 27.54.75. And that starts a gray leg A. What does it mean in the Chapman methodology, gray leg A? It means that it is seriously under the Grand Canyon fall from the previous high. And this occurs in the Chapman wave. This is a peak F. There's no other way to count it at this particular point. Single leg A to the downside makes this week really important. Why? Because a move into the 27.63 or higher area would be very positive. It would extend this leg to the upside and turn this 9-period moving average of 27.09 in the weekly chart into really important springboard potential action, number one. Number two, the technicals, the MACD and stochastic in the daily chart on the left, weekly chart in the middle, 120-minute chart, we can move away right now. That's done on the right. And this is the monthly chart because the E-mini March futures, I don't get all the price points. If I go to the continuous contract, you can see that we've gone to a D in the monthly chart right here. Okay, and this G sets to into a D in the continuous contract, peak D in the weekly chart. So what I'm really looking at right here is, if you go to the Dow, I'm going to go to the cash, and of course cash is going to be different to what you see at noon because it's acting on prices that were at Friday's close, 25,219, high of 25,482, sorry, 432, pulls back. 24,968 is really important. 9-period exponential moving average support. Will it touch it this week? That's the big question. So what you've got here is a very sharp move from the 23,360 level, having hit 26,616 in the month, in the all-time high, at a peak D in the daily on the 26th of January. That 33,000 point, 3,300 point drop. Is seeing a very good reaction to the upside, or about a 68%, I'd even say, maybe it's just over 60%. And now what we're looking at is some testing. And that's why this week, again, here in the Dow needs to go above 25,520.53 to start a gray leg A in the weekly chart. Monthly chart leg E, watching this real closely, hit the 9-period moving average of 23,733, went 400 points below it. Now it's way above. So why is this week so important? Because the weekly chart, MACD and stochastic, are very poor. The daily has not crossed, the MACD has not crossed positive, although the histogram has improved. Stochastic is only at 48%. Monthly chart is still very strong in all time frames. That's why it's so important. That needs to get to the 25,660, somewhere to 20, it needs to be trading in the 25,600s for a couple of days. And that would say, hey, this is really good action. And then we can start to talk about, was that the low on the 9th at 23,360, or was it a low with a residual low to follow? Remember, I've been speaking about the earthquake. You've got your earthquake, you've got your aftershock. Sometimes the aftershock in the market can come quite a few weeks later, 6 weeks even, and not break the low. It could be above it, or it could break the low. But that residual low very often has much better improving technicals, so it's more an emotional news-related low, but in fact, you've already made your internal low. Market's going much higher. We don't know yet which one at least I don't know which one it is. I have a lot of clues, but I need to see the evidence, and the evidence is not yet there. It will be there probably by about say Wednesday. So now look at this. We're looking at the S&P. SPX is the cash, of course, cash 2732.22. If it opened now, it would open about maybe 10, 11 points lower, so it would be at about 2722. But 2702 is the 9-period moving average support in the daily. The weekly chart has right there 2723 as 9-period exponential moving average, and the monthly chart is still technically very good, although the histogram is starting to pull back. The MACD is still good, and the stochastic is at 94%. That's really good, except it is turning down a little bit. I'll be back. Basil Chapman. This is the 8:14 a.m. time frame, and the show will be rebroadcast at noon, my usual time. So this is the early day. Call in 877-927-6648. Futures are down 136 in the Dow. I'll be back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi everyone, we're back. So the Dow futures are down 128. The S&P futures are down 11. We've got some weakness. Let's go through this. So we looked at the S&P. And the resistance down the S&P is around about the 27.53 area. Go above that, that's going to be very positive this week. So the question I had was, for your subscribers, what kind of positions are you having? We're long and we're short. We'll be long the Dow diamonds, and as well as a portion in the 3 times long the Dow all of last week. And we've got, we have short positions. We still have our short positions in the semiconductor area and in the home builders area. We are long a bank, we're long infrastructure. So we've got a real mixed portfolio, trying to just go sector by sector and try to derive trades from what those particular sectors are telling you. So within the context of the markets right now, if you look at the Qs are down quite sharply, down 0.81 at 164.15, down 0.49% pre-market. But it's got a single leg 8 to the upside. 162.38 is the 9-period exponential moving average. That has to hold this week. I think it might hold, but at this particular point, we'll have to watch and see what's going on. Weekly chart is still very weak, but much better than the others technically. So these are areas that, if you're looking at, for instance, the XLK, which I always look at, which is the tech sector, has had a double check 07. Yep, it's had a leg B to the upside in the Chapman wave. D is where you always start to look at perhaps a change in trend. But what's really important is that this has even a better technical picture in both the daily and the weekly and the monthly than the Qs. And the Qs are made up with a lot of tech sector, right? So we're going to watch this to see at 67.18, 66.70 right now, down 48 cents, whether the 65.91 level holds. It's going to be a very important week because I always say that the third week after what could be a fairly serious low, that's where you get the test, because if it's a strong week, it means, you know what, you could be going up to the next level on the left side. If you fail, watch out, because that's that whole thing with the internal low and the residual low. How does that play out? So watching these closely, going to the 68.50s in the XLK, which would be very positive. If you're looking at the SMHs right now at 102.81. 104.06 was the high on Friday. We remain short. We've been taking really good position profits on the way down. Top was at 108.56 in the semiconductor index on the 23rd of January. Plunges down to 93.88, one of the biggest moves to the downside that the SMHs have ever had in a short period of time like this. 108 to the 93s. Very good bounce. And now we're going to see, can it climb into the 105, 106 area this week, or is it now going to retest the 101.39 period moving average? So that's that. If you look at the HGX right now is the Philadelphia Housing Sector Index, lousy rally at 334, made an what happened to my notation? Oh, it's in the other chart. All-time high on the 24th of January at 369, plunges down to 369 to 313. I would call that a 53-point decline. What is that about? Maybe it was about 14%. It's a very big decline. And the weekly chart looks terrible. So the home builders are still under duress. Okay, let's go to some other things here. Let's go to the TNX, which is the 10-year Treasury note yield. And it made a peak D in the Chapman wave at 29.26 on the 15th. Pulls back Friday, holds the 9-period moving average. Actually, a pretty good day so far, up 25 cents at 29.02. Look at it in that weekly chart. Doji said, hey, watch this Doji closely, because if there's a close below the week's low of 28.17, you could come down quite a bit. And if you break and close above it, above 29.26, that'll be very important. So leg B breakout in the monthly chart, and I don't have. Let me see if I can do this now. I'm going to get out of this for a moment. Close workspace. I want to show you what I showed my subscribers to my opening call over the weekend. Look at this. This is the long term right there. This is a very long term yields. This is a triple yield chart, the 30-year, the 10, and the 5-year. What we're looking at is here we go. So we're looking at the yields, leg C in the Chapman wave weekly chart. It should go much higher because it's got an overlapping wave, a peak A and a peak B to 29.80 back on the week of the 27th of October. Pulls back quite sharply, but it doesn't take out the left side low. Then it has an inside A and a B, and then an overlapping C. Picks up the previous B, adds the new C, and now they're both in C. It's like I call it an overlapping wave. And that invariably goes to a D. So this means yields are going up over the next couple of weeks, even if in the short term they pull back. This is a leg D in the 10-year. That's the 30-year, the white one. T note, 10-year yield. This is the 10-year T bond yield, 30-year, TYX white. TNX is the 10-year brown, and it's the 10-year T note yield, leg D, and a leg D in the 5-year cyan colored 5-year huge move. Look at that huge move. Percentage-wise, one of the biggest we've seen, and so that's going to be that's impacting the market a little bit, I think. And here's the charts I was talking about before. WOOD. Let's get it there. Come on. What happened? There it is. Look at that. This is a big move. 77.21 in the iShares Global Timber and Forestry ETF pulls back to 70. So that's a 10% pullback, and has a very strong rally to the 76, high 76s. So if this starts to fail, that's going to be very negative. If it takes out the high, I have to cause a recycle, going to a new leg D, and peak F in the home builders, not a good sign weekly chart. So we're putting this together, and I'm going to show you something very interesting. Gold is down a little bit. It's down 7 at 1341. There's that single leg A I'm always a little nervous about. There's the weekly chart. It says, look, a cup. Maybe this is the cup right here. And this is a handle being formed, little handle being formed. But let me tell you that the dollar, which we were long a couple of times, and this one didn't work out. We took a little bit of a loss, but the dollar suddenly made a low the very next day. And now this is a pretty good move. Look, 3 green candles in the daily chart, but it's still within the context of the H pattern going to an M pattern. This is what I'm going to put in here. Remember, chart patterns repeat. They are merely morsels. They are merely fractals, that is, patterns that repeat. And look at this pattern. There's the H, and it's going to repeat again to make a lowercase h going to a lowercase m. That's what I believe. And then maybe the dollar starts to fail as gold finally picks up strength. So let's go through silver. Silver's the same thing. Silver is pulling back down at 1647, down 14 cents. So this is going to be the show that's repeated at noon. I wouldn't be surprised if some of these prices are actually sticking at noon. I think there's at least a day or two of rest right here, and a big test coming for the general market. So silver very weak, and I've been saying all the time that as long as silver remains weak, it really puts a strain on gold being able to sustain rallies. And high grade copper is pulling back some. It's down 0.018 at 3.19. It's going to be very important because the commodities are pulling back here. If copper pulls back to the 3.15 area, that's going to be a very steep pullback. I'll be back. Dow futures down 123, S&P is down 9.7. Be right back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
It's a special month at TFNN, and with market volatility back, we've decided to hold an open house in our Tiger's Den. For this month only, you can get a full 30 days of Tiger's Den membership without paying anything. The Tiger's Den is our interactive chat room where you can chat with other tigers and tigresses along with the TFNN hosts during each of their programs. For all of the details and to start your 30-day free trial to the Tiger's Den today, visit the front page of TFNN.com before this deal is gone.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, everyone. We're back. So as I say, Dow futures are down 124. I suspect that at noon when the show is rebroadcast, the Dow will be down quite some. I'm not sure today is bounce back day. You know what? Almost every time we've had these sharp sell-offs for the last week, the market has just reversed and doubled that to the upside. I don't think this is the day. I think this is really a day of rest and going into Wednesday, and then we'll see. In fact, there are a lot of things going on. And once again, I'll just give you parameters. Let's look at the VIX to see exactly what's going on. The VIX is up 1.79 at 21.25. But look, that 50.30 high on the 6th of February, What are you going to do to get back there? It's going to have to be very soon. But what I am impressed with in terms of the VIX, I didn't do this over the weekend. I really didn't have time. I just decided one long weekend I'm going to take as much time as I can just to be with the little grandkids who are coming here visiting us, and with my wife. We just really did all these fun things. So I did a lot of charts, but not the usual number. But what I didn't do is the VIX index. I wanted to do it, and I said, you know what, let's just see what happens this week. We know exactly the parameters. If the VIX, which is holding in the 21s, it held for Friday, the close, one of the few times that is held above the 9-period moving average in the weekly chart of 17.15. I was talking about that all week. 1424 is the 200-period moving average. It held very well. I think that the scenario that I've got of internal low waiting for a residual low is it that we have not made the bottom. It might turn out later to be the bottom, but there has to be some testing. So in other words, I don't think we're making a V-shaped pattern in the market to go straight up to all-time highs. We needed that, and we needed some time as well as just price. Price would be a real fool of what would do if it's just price now. Within 4 weeks, we're at all-time highs in the Dow, the S&P, and the Qs. That would say to me that we're going into an acceleration run that is just going to take every penny now instead of later on. And world markets, I mean, look at this. If you go to DOW, this is the Dow DAX, the German chart. Look, this DAX is not going back to the previous high. Peak F in the monthly chart all that quickly. It's going to take quite a lot. It's gone from the high that was made, and I say the high because if I give you the number, you got a different number. If you're looking at the DAX, the chart pattern is exactly the same. This is the Dow Germany stocks index, and the high on the 23rd of January was at 453, plunges down to 410. So we're talking about a 10% correction. Yeah, 10% correction is serious, but I think it also needs some time. And that's why I'm saying that I believe we've made some kind of internal low, and we're going to see if we make that arch from pattern that I always talk about, lowercase h formation, to do some retesting, or if it's the V-shaped formation. And we'll know within a few days, let alone Friday. That's what I'm thinking. Okay, so let's go. And if you go to the GB, Great Britain, I think it's Great Britain, DOW. Yep. English, the FTSE type chart. Look, peak G way back in the 300, and this is again not the actual FTSE. If I look, I can tell you now what the FTSE is doing. FTSE is right here. So we've got the Dow, Great Britain index at 348 back on the 16th of January, 348. Comes down to the low of trough D at 316. So that's 30, there again, 10% correction. Where would I find all the others? Oh, here it is. So we're looking at the FTSE is down 18 at 7,229. The Nikkei, hey, this is interesting, 224. This is the Nikkei futures. Look at this, the Nikkei NK, Nikkei futures makes a top, peak D, peak E. Peak E on the 23rd at 24,200, falls back to 20,565. So there again, you've got yourself a very serious decline, 24 to the 20. Oh, that's even more. What is that, about 16, 17%? Yeah, look at that weekly chart, peak E and pulls back, leg E. I have to take this seriously. Yes, there can be these rebounds, but I'm still comfortable that we have long positions, short positions. We're going to stay that way for a little while, I think. Okay, next thing I want you to do is, we've done the yield, done that. Oh, crude oil, of course. Crude oil right now, missing link, is down 43 cents to 61.93. It goes from the 66s down to the 58s. There again, big pullback, peak F in the weekly. These are serious things, except that the monthly chart has made a higher high, and that's gone from the lowercase h to an M pattern. There's the H to an M pattern, or a very large H, and now it's turned around. So the crude oil is suggesting that it is within a trading band, that the 58 to 57 area is very, very strong support, that the 60 4.5 to 65.5 areas going to be strong resistance. I think it's now chopping in the trading band. Good. We've got a bunch of these things. I was asked about the IYT. When I look at the IYT, which is the iShares Transportation Average. Oh, before I do that, I'm bound to forget. Let me do this right now. We're looking at, this is, remember last week, actually 2 weeks ago, I started to say, I think that the Bitcoin has made some kind of a low, 6,000 exactly. How do you get 6,000 6,000.00? That is just a perfect low, a round number, exact low. Going from the 20,000 area to 6,000, what I said is I believe, like the Dow, we made some kind of an internal low, and then there should be a rebound, and now we're in leg B to the upside. And yes, I was asked if I would send this particular chart to old G. I will send it. I tried to do it earlier. It didn't quite work, but I will send it. And so it's actually CryptoWatt.ch /Bitfinex. I'll send it, okay? So anyway, this is leg E, and it's about to hit a lot of resistance in the 12,190 area, and it's trading at 11,503, so it's within a few hundred points of starting to find a lot of resistance. Let's get out of that. So IYT, Transportation Index, goes from 206 to 176. I would say that a 30-point decline. It's a big decline. And what we're looking at is a single leg A, holding the 9-period moving average, but really the weekly chart shows a lot of weakness. I suspect that that IYT, the iShares Transportation Average ETF at 189.34, is going to make either an H pattern or an M pattern, but to make the V-shaped pattern until it gets to the 198.201 area, I have to consider it's the retracement failure mode. I'm not sure it's going to do much better until it takes a little bit more time. GBTC, while we're talking about Bitcoin, this is a leg B. I think it's going to pull back a little bit here. I like the Bitcoin that we were looking at. The cash, I think that's bumping into resistance. This has got a lot of resistance. It's at 19.26. It's up $1.50. So it's above 1920. Yeah, so this high that was made, I think it can go a little higher. This is the area that I think is going to see a lot of resistance. 1960, the high of the 29th of January. How it deals with it, this is a very much better chart than the others. You see the way the technicals are confirming. So I think GBT, I think this is a pretty decent low for a trade that was made on the 5th of February at 9.60. Hey, a double. Isn't that incredible? Such a short period of time. We'll be back. Basil Chapman, 8 a.m. show. Ready for
Hi, folks. Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
So we've got Walmart down almost 8 points at 96.80. It was talked about for so long that it was coming on very strong as competition to here we go, competition to Amazon. But you know, it's in a different world, and I think that you have to consider, yes, it's made big improvements, but Amazon is in everything. I mean, they are everywhere. So I'm not sure that you can really talk about it. Rather talk about Walmart as independently trying to build its own web force, its own marketing strategies, etc. And I think, I don't know what the reason is. Obviously, must be a lookout for the earnings coming up this year. But to me, it's a work in progress. It's a monthly chart, even has 92.62, tremendous support, made a high, all-time high in the 110 area. Was that just under 110? I think so. 109.98, 2 cents off a round number high on the 29th, trading right now at 96.90. I think it's something to keep your eye on, but I would wait a little while. Let's see if Macy's, it's something completely different. They've not been able to well, look at that. So the monthly chart goes from the 73.61 area back in July of 2015 to the most recent low in the 17s, trading right now at 26, down 27 at 25.99 after a strong leg A and a B. What I'd be looking at here is Macy. See, my contention is that people will not give up going to malls. They might not shop all the time at the malls, but they want to walk around. It's a gathering place. It's like the circus, right? So everybody wants to meet there. But my thinking is that Macy's has a much greater turnaround. The climb from where it was as one of the leaders in the retail business going into the 2015 high to kind of a failure because they did not anticipate the impact that Amazon would have. That's going to take a long time. Walmart has the capacity because of the number of stores, etc., that they're able to. They've been a national company for so long that they perhaps have the infrastructure. But what's really important right now is that I'm not sure Macy's has quite the same infrastructure. So yes, it could bounce, but it's going to be taking a longer time. So now what I'm looking at is within the context of the RTH, which is the retail index, obviously being impacted today by Walmart's pullback. Hey, well, why is it so slow? What's going on? There it is. So you went to a peak F in the weekly chart. Still not bad. Look, the MACD is quite strong. Market vectors, retail ETF is a leg D. So I'm not prepared to write off retailers to the extent they can say, oh, goodbye, this is it. No, I think that retailers are here to stay, but the actual mechanism of sales, that's what's changing. And I think you're looking at it in the automobile industry. If you look at the autos, the whole marketing thing, everywhere you look now, they talk about the lease. They're making leasing a big thing. In fact, Volkswagen really does mostly leases. So if you're looking at leasing, you look at the price, you've got to read that. They all have to get X amount of money over 2 years, 3 years, 4 years, 5, whatever it is. Now, what they'll do is extend the lease time to give you a better price. They will, sometimes they'll include 0% down, but they're going to make it up somewhere, somehow. So it's the same thing. It's marketing. And this is what we're looking at. The retail index is saying a bit of a struggle coming up still for the next few months. But at some point, there will be another pickup in this RTH Market Vectors Retail ETF, and that's what we're going to be following closely. Had a question about, the steel. I love the steel area. We made an all-time high on Friday. Boom. I can only call this a leg A. It can fail as a leg A, but that's really unusual, an all-time high. So I'm looking at steel, and I think that there's still a tailwind that's going to help the steel sector. The various steels have done different things at different times, and they've actually rotated. Some have done well when others have been sort of languishing. So keep your eye on the steels. I think it's very important. What's really important about this particular chart is that in the market, in the Van Eck Vectors Steel ETF, this is, look, I bet you didn't expect that. Steel once was at 114.12, the steel ETF, back in May of 2008. And it was after the market, that was, sorry, just before the, look. The home builders made their top in 2005. The steel makes its top in 2008. 114.12 plunges down to 20 in November of 2008. In a few months, look, 1, 2, 3, 4, 5, 6 months, half a year, you go from 112, not cut in half, you go down to 20, right? So that's over a 4-point decline, a fourth. And now look what happens. It comes back, retests, there's your internal low in November of 2008 at 20.19, runs up to a peak E at 77.42, February of 2011, 6 years ago, seven years ago, and then comes down in a very large arch formation and goes to 15.30, 5 points lower than the low in 2008, back in 2016, April, and now it's doubled, more than doubled, it's at 51.37. And it hasn't really broken out decisively yet. So this, to me, one of the longer term areas that you've got to be looking at that's acting very, very well right now. So a couple of things, the question about the EUR, USD, here we go, euro dollar currency pair, peak D daily, pulling back sharply at 1.23. What I had said last week is this particular pattern here. I had done a whole study on this inverse handle and cup. See a little small handle, large cup, invariably, this either makes a head and shoulders, left side, right side, bottom, or it breaks down completely. Rarely does this handle and cup break to the upside if it's done in a short period of time. If it's very lengthy and looks more like a bowl formation, it can do that. But it's only a leg C, probably a peak C this week in the weekly, and it's a leg B in the monthly, looking very strong. That's the reason why I'm saying I think gold will make a move later because there's a relationship here, but the dollar impacts it shorter term, and the dollar right now is trading at DXY, is trading at 89.66, up 45 cents, making the arch, lowercase h, to the second arch, lowercase m formation. And if you're looking at the USD JPY, I wonder if that's finally had a chance to rally. Yep, a little bit of a rally. Coming off the low, this is a leg A, horrible weekly chart, says, you know what, it needs to close decisively above the low of the week of the 8th of September, above 107.312, and then it can have a better rally, and the rally could take it to the 108.50, 109.30 area. 109.26 is the weekly 9-period exponential moving average resistance. monthly chart still looks quite lousy. Amazon, I was asked about. Amazon, when I look at it over the weekend. Yeah, I did look at it over the weekend. This is a very strong retracement rally. Does it break to a new all-time high? Well, the weekly chart is still very strong in the MACD. Stochastics pulling back, but still at 83%. It's this monthly chart that's going to be absolutely imperative to watch, because by the second week of March, I'll talk about it when we get back. We're talking about Amazon trading at 1446.75 down to. I'll be right back.
You don't buy into that nonsense, do you? You know you can't time the markets. I didn't. And in 2006, I set out on a mission to do just that. I began by surrounding myself with the greats like Tom O'Brien, Larry Pesavento, David White, and Basil Chapman. I read countless books and even looked to the moon and planets for answers. Now, we both know that trading is 80% mental. So I learned the exact tools that Tony Robbins uses to overcome fear. I'm Steve Rhodes, author of Mastering Probability. And last March, the folks at Timers Digest began tracking my newsletter signals, which through January 18, 2018, placed me as the #1 gold timer for that exact time frame. Now, I can't officially be recognized until Timers Digest has a full year of signals, but clearly I've learned how to time the markets, and I'd like to teach you how to do that as well. Subscribers to Mastering Probability gain access to my live and archive workshops where I show you the exact same patterns that earn me this #1 ranking. If you're looking for great market calls and an education, sign up for Mastering Probability today at TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
Hi, everyone. So we're talking about Amazon. Remember, this is the recorded show. This is the 8 a.m. show till 9 o'clock Eastern Time, recorded and replayed at noon, my usual time. I think I might have to do that tomorrow as well. So 14.98 round number high on the 2nd of February for Amazon. It goes from 14.98 down to 12.65.93. So that's one of its bigger pullbacks. But what's really important, will this be an arch failure pattern? Make it real simple. If you see Amazon trading by Thursday above 14.78, good chance it's going to retest in a V-shaped pattern, the high, all-time high. But if it's trading closer towards the 14.30s, that 14.21, 9-period moving average is going to be tested. So this is going to be an important week for me. So I was asked about the XLF. This is the financial ETF. This is the S&P Select Financial Spider Fund, leg E in the weekly chart, peak D in the weekly. I haven't got the down arrow yet. I technically should have done it, but the MACD didn't close across lower, and the stochastic did go under 80%, but if I needed to see the XLF on the Friday close below 28.63, and it wasn't. So I'm holding off. Everything about it says there should be a down arrow here, but I just haven't done it. Down arrow in the daily says it's a sell mode. Rebound right now at 28.86, down 12 cents pre-market. I'm looking at 28.64, very important 9-period moving average support. A breakout occurs in the 29.30s. Still, I like this. We are along a financial, done very nicely. So we're about to wrap up. So before I wrap up, since this is a pre-recorded show, by the real time, noon, let's call it at 12:53 this afternoon, if that's the time you're listening to this live. Let's see if the Dow is down. What I say to subscribers to my opening call in my my newsletter, I said that if the first of all, if the E-mini ESH18 is down 8 points or more at 10 minutes past 11, chances are we have a weak close. There it is, made a peak F in the 120-minute chart at 27.54.75. So just keep it in mind if you're looking at the Dow down about -60s at 10 minutes past 11 says, we've got that consolidation that we're looking for. They should pull back into Wednesday, maybe even Thursday. We'll see. Very important week as far as I'm concerned. We'll talk more about it tomorrow. Have a great day. Stay tuned. You've got.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.